Okay, welcome back to the channel. If you've been here before, then you're going to know this video is slightly different to what I normally trade and what I normally teach. So I do predominantly trade SMC and ICT concepts using supply and demand zones on the higher time frame to get a bias, and then go to the lower time frame to get confirmation, because that is the bread and butter setup that does work. And I'll be making a video on pretty much my exact setup that I'll share with you that gets high probability trades. I'll get that out shortly, but this video is going to be more of a going back to kind of the basics, and I guess you could say technical analysis, I guess you could say retail trading, but it does work, and not everything has to be this special kind of SMC or whatever you want to call it stuff, because ultimately SMC trading is pretty much just retail trading, or it is just retail trading, just with fancy words and fancy names for concepts. But what I've been doing recently is making more of a move to quantitative trading and using coding to create strategies that can be easily backtested and easily implemented as trading strategies without the problems that you face by being a human and having human psychology that get in the way of your trading, like greed and fear. So just to kind of make everything mechanical, make everything robust, so that anyone can trade it really. And even if you have no skill at trading and no experience, you pretty much just implement this and just let it trade for you to create proper passive income. So obviously you've seen the title of this video, and it is an RSI trading strategy, so the relative strength index. And I've never been a big fan of indicators. I've always think they're not very useful, because generally they're lagging and they only show you information that has already happened in the past, and it doesn't really help you in the future. But I was doing some research on it, and I found an idea of a trading strategy, and I coded it up, tested it without any optimization, and it just worked. And then I tested it with different settings to see if it was robust, to see if it could actually handle different market conditions, and it has. It's been profitable on nasdaq since 2003. It's not possible to test it before that on TradingView. I'm not sure when nasdaq was introduced, actually. Maybe it was introduced in 2003, and that's why. But on all the data there is for nasdaq over the past 20 years, it has been profitable, and I can show you that here. Obviously, you've probably seen in the thumbnail, but this is kind of the equity curve for the strategy without taking into account compounding. So obviously if you had compounding, then it would look less like a straight line and more like small at the start, and then it would kind of curve up as your equity increases. As you can see, if we go to the properties, I've just tested it just for this graph since 2010 to 2014. So there's 14 years of data with a net profit of 150%. So after costs, it comes down to about 10% a year, which is kind of standard for the nasdaq. But then when you look at the max drawdown, it's only 16% compared to the max drawdown of the nasdaq, which is 40-50% maybe. And so if you kind of adjust the risk, then this strategy performs very well. Even just 10% a year, if you have £600,000 in funding, then that could be £60,000 or dollars, whatever you trade in a year, which is a very, very nice salary just from one strategy. And I'll get into exactly how the strategy works and the code for it, so you can create it yourself, copy it, whatever you want to do, learn it, and just kind of manipulate it, play around with it if you're interested in quantitative trading. But I'll get into how the strategy actually works. So obviously the relative strength index you can add to your chart by going to indicators, type in RSI, click on relative strength index under technicals, and it'll add this little thing to the bottom of your chart. And then what you can do, you can come into the settings here, change the RSI length to 2, because I use the 2-day RSI for this strategy. You can leave everything else the same pretty much, then come into style, and I just turn everything else off because you don't really need it. Leave RSI on and then just turn everything else off. Leave the band for now. You can just turn all of that off. Get rid of the middle band and put the upper band to. So this is basically the standard, what people use in the trading industry. They use upper band as 70 and the lower band as 30. And the strategy does perform really well with these settings, but I wanted to filter some of the trades to make it only enter when it's really oversold. So I changed it to 20, and it works pretty much exactly the same performance-wise, but there's less trades, so less trading costs. So if you set everything like this, what you'll get is your RSI like this. And you can see when price is above, it's overbought, and when price is below, it's oversold. And basically the theory behind the strategy is buy when it's oversold, and then sell when it's overbought. So it's a pretty simple strategy. It all makes sense. So it's not just random settings and random code. It does all make sense from a technical standpoint, from a trading standpoint. You want to buy when stuff is oversold and then sell when stuff is overbought. And so if you look at any of these trades, if I just edit it to go on bar close, what you can see is once a candle closes and the RSI is below 20, so below this lower bound, will enter a long trade, and it will buy as many shares of nasdaq as it can with the funding, with how much equity you have. And this is no leverage. So if you change the leverage, then the returns go up loads as well. This is with no leverage. And what it does is it buys when the RSI closes below the lower bound, so 20, and then once it closes above the upper bound, 70, it will just close the trade. And so sometimes it will win, sometimes it will lose. Here you buy when it's low, sell when it's high. Here you buy when it's low, you sell when it's high. Here you buy when it's low and it continues going lower. But then when it becomes oversold, or when it becomes overbought, you close. And even though you bought when it was oversold and then sold when it was overbought, you still make a little loss on this trade because price was in a drawdown here and the Nasdaq was bearish for a few days. But then when it recovered, you managed to make some money on this trade. And then over here, what you can see sometimes, you'll buy when it's oversold and then price will continue down and you'll be in some drawdown for a bit and then price goes up, becomes overbought, you sell, and you've made a little bit of profit with some drawdown. And that's the theory behind the strategy. And yeah, I've tested on the daily time frame because that's how it works best. Obviously, swing trading is a very nice method for trading, and it keeps your trading costs down. And it's just the most profitable way to trade this strategy. So if I go into the code, I can share with you everything that it does. It's pretty simple, so I'm happy to share it with you. I do have some more advanced strategies that the code is a bit more complex and more private, but I might share them with my group at some point. If enough people are interested in quantitative trading, I can teach you guys a bit about that. If you want to get into the more coding side of things, you don't need any coding experience, you don't need to be skilled at it. It's all pretty simple stuff, and if you need any help, then I'm happy to help you. But if you're interested in that, then let me know down in the comments, or join the premium Discord group and we can talk about it there, and I can set something up for all of you. But basically what this strategy does in the code, first I'll just define the backtesting range. So that's pretty simple, just start year, start month, start day, and the end. And then we just got a function to check if we are in this time period. And then something I've added that I'm going to be testing properly, because obviously currently I'm just day trading the strategy, or not day trading, but trading on the daily time frame. I'm going to test trading on lower time frames during the market hours. And so if you're interested in testing that, you can use this code here to set your start hour, start minute, end hour, end minute, and then have another function and condition to check if you're in that time range. And then through PineScript, the TradingView coding software, coding language, this is how you create an RSI, just ta.rsi, and then on the candle close and a length of 2. I set the lower bound as a input that you can change as 20 and the upper bound as 70. And then this is the condition to enter a long trade. So you can call this whatever you want. This is just a variable. And then there will either be true or false, which is called a boolean. So if all the conditions are met, then this will be true and it will enter a long trade. If they're not, then it won't. So what this condition checks for is if we're in the date range. So that's this thing over here, check we're in the backtesting range that we want to be in. And then you want the RSI to be below the lower bound. So basically what this says is if the RSI closes below 20, then the long condition is met. And then when do you close the trade? So I've called it short condition. It could be exit condition. And this is when the RSI closes above the upper bound, which is 70. So that's really simple stuff. And then it's just an if statement. So if this is true, if the conditions are met, then you enter a long trade with the quantity being the leverage times the equity, which I put as 100,000 over the close. So this calculation just figures out how many contracts of NASDAQ you could buy with your equity, and just a comment for it. And then another if statement, if the short condition, the exit condition is true, then you close the trade. So this is a really, really simple code, and yet it still works. So it just shows you that you don't need complex strategies, you don't need complex ideas. Some of the simple stuff does work. You just need to test it and make sure you're not over optimizing it. That's something else you don't want to do. You don't want to curve fit based on past data, because then it's less likely to perform in the future. But if we go to the strategy tester, what we can see is that the return's very nice. We've got a profit factor of 2, so basically it makes twice as much money as it loses, and a percent profitable, 73%, so a very nice win rate. Max drawdown, quite high, but that can be reduced if you want to change your risk. But you can also change the leverage, and if I change the leverage to 2 and update that, what we can see is the returns double, the drawdown almost doubles, And you can do this, we can set the leverage to 5 if you want the leverage of 5. You can see the returns are 750%, but the drawdown is 60%. So obviously you're not going to trade a strategy that has a drawdown of 60%. And something else you can do is set the leverage back to 1 and change, instead of having 100,000, you can add in strategy.equity, and this will basically include compounding. So instead of risking the same amount per trade from your starting capital, it will do it based on how much you have at the moment. So here what you can see is the net profit more than doubled, and the drawdown only went from 16% to 22%. And you can see the equity curve is now a bit more, or like a curve going up, a bit more exponential rather than just a straight line. But if we go back to setting this to just the starting capital of $100,000, then something else you want to see when you're making strategies, if we ever do make strategies together, is that you want it to be like consistently going up rather than just going up in the past and then a bit flat or too much volatility. There's a little bit of drawdowns here and here, but for the most part, it's pretty consistent. You could easily get just a line of best fit going through this data. And so this is pretty much the strategy. If you want me to send you the code, then I can probably do that, or you can just copy it. It's pretty simple. It'll be a good exercise just to write it yourself. But this is pretty much the strategy, very simple to trade. And if you are interested in quantitative strategies, then let me know and I can make more videos like this. I think it's really interesting, even if you don't trade it. It's just a nice way to look at the market and learn how to trade. Because even if you're not interested in technical trading and like retail strategies, it's still good to understand how to make a profitable strategy. If you're trading SMC, you want something like this that is mechanical and is rule-based, and you want to be able to backtest it. So if you have a strategy that you like and a strategy you think works, but you don't know how to backtest it properly, then you can let me know, and maybe I can create some code for you. And we work together to get the strategy, backtest it, and see what the results are by having a fully mechanical, rule-based SMC strategy. I think that'd be a really good thing to do, and that's what I'm going to be working on for my premium Discord group. So if you're interested in that project, definitely let me know. Maybe we could create a group of people that are also interested in it. We can all work together and create a profitable strategy exclusive for us and exclusive for our premium Discord group. But hopefully this has been helpful. Any questions, do just let me know in the comments or message me on Discord. But yeah, hopefully you've enjoyed it, and thank you for watching.